Welcome to After Hours Action. I'm Greg Greenberg from The Street. U.S. stocks started this short trading week mixed as an apparent nuclear deal with Iran took some of the froth out of crude, thereby bolstering the global economic outlook. Let's wrap up the market. The S&P closed down 2 points while the Dow was up 8 to 16,072. The Nas finished 3 points higher at 39.95. Oil, which spurred buying in the morning, was down 66 cents to 94.20 a barrel. As for individual stocks, Alcoa was up 4% to 960 as Goldman Sachs raised the shares to a buy from hold based on its exposure to the aerospace and automotive industries. Goldman's analyst raised his one-year target to 11 from 8, and Burger King shares finished 2.5% higher after the fast food franchise also got a vote of confidence from Goldman Sachs, which initiated coverage with a buy rating while forecasting annual earnings growth of 18% to 20%. Finally, shares of Walmart finished up 80 basis points today. The world's largest retailer named Doug McMillon as its next chief executive officer. A Walmart lifer, McMillon was widely predicted to succeed CEO Mike Duke. Now, financial stocks have been huge gainers in 2013. The S&P Financial Sector ETF, the XLF, is up 31% this year compared to the overall S&P, which is up 27%. If you've been in Peter Kovalski's Alpine Financial Services Fund, however, you'd be doing even better, up 38% year to date. Earlier today, I asked Kovalski for his 2014 outlook and to name his favorite financial stocks. Peter Kovalski, financials had such a fantastic year in 2013. What makes you think they can do it again next year?
The sector is very economically sensitive, so I have a view that the economy is slowly coming out of its recession. As it picks up steam, that should be more beneficial for the financial sector in increasing their profitability.
And one stock you like is Blackstone. Has the private equity industry learned something from the credit bubble? Blackstone stock's up 80% this year, so obviously they're doing pretty well.
Yeah. Well, Blackstone and its peers came public around the top of the last IPO market. So I don't think the Street has really seen the true operating leverage that these companies have. And due to the performance fees and the ability to raise capital right now, they're one of the few sectors within the asset management area that's really been growing organically through attracting additional investments. So I think what the Street will be surprised at is I think estimates will move up if we get into a more robust IPO market.
All right, speaking of IPOs, you're also a fan of the Intercontinental Exchange. This stock also has been on a great run, up over 70% this year. They bought the New York Stock Exchange. Do you think they're going to be able to extract the synergies that everyone predicts they can?
I think they will. This is really a milestone career transaction for them that's really going to propel them to the next level. It's going to broaden out their platform, which I think they'll be able to leverage on a global basis.
All right, you also like LPL Financial. We've seen a trend towards more independent brokers, people leaving the big shops, whether it be Merrill or Smith Barney. They want to set out on their own. They get a higher pay that way. Is that your reason for liking LPL?
Yeah, LPL is really a good play on the trend that we're talking about of more independent investment advisors. They're leading, my view, they're kind of leading the field in providing that service for people who want to be independent advisors.
And then finally, Southern National Bank Corp. This is a small cap Virginia-based bank. I hadn't heard of it. Tell me all about it. Why do you like it?
Well, one of the themes I have within the financial sector is the consolidation of the community banking industry, and looking for banks that will benefit from either an acquirer or being acquired. This institution right now has been in acquisitive mode and purchasing some companies to build their franchise. I think at the end they'll probably be an attractive franchise for a larger institution who wants to move into that market. The company is run by a husband and wife team that had run a bank before in the same market, built it up and sold it. I would expect that may be their same game plan for this one.
Our thanks again to Peter Kovalski from Alpine Funds, and thank you for watching After Hours Action. For The Street, I'm Greg Greenberg.